We're not even close to a bear market yet, friends. So if you're panicked already, I don't know what to tell you, man. This isn't. I mean, this is what S&P right now is at 42.66. The highest it's been in the 52 weeks is 48.18. So we take 48.18, subtracts by 42.66, divide into 48.18, and that gives us all of a 11.45% decline. That's a correction. That's not a bear. Corrections happen all the time. So if you're panicked by this, you're in the wrong place, man. This is a big fat nothing burger. And this is what I've talked about when I was telling people, like, look, at the end of the day, it's one thing if you're accumulating assets, you're buying into this as great. But it's just as small. I say it all the time. No one remembers July, August 2011, May, June 2015, the Q4 of 2018. It just looked like, in hindsight, you completely ignore the fact that in 2011, 2015, the markets were up. Might not have been much, but they're up. 2018, they're only down by 4%. You're like, yeah, no big deal. But Q4 is down 19.4%. These are not bear markets. This is a freaking blip, man. It's just no big deal. But yet, if you're freaking out about this, what are you going to do when the real decline comes? I cannot stress enough. I don't know if my phone will go back that far, but now I guess it won't. Oh, there we go. In 2000, so remember, 2007, the S&P 500, October 2007 was at 13. No, it's December. Hold on a second. March, it's right there. About 1,500. March of 2009 is at 900. Fell from 1,500 to 900. That's 600 points. That's 40% down. That's not including, I don't know if that's price, but we know it's down about 54% when all of a sudden. That's not day to day. That's just, basic. But anyway, either way, that's 4 times more, 5 times more than what we're going through right now. And it's just the issue with when markets start turning south, people start getting nervous because they don't know when it's going to end. They look in hindsight, they say, oh, it ended, and there's no big deal. Or I was able to hang in there. Were you? Same investor you were in 2007, 8, and 9? The same investor you were in 2001 and 2? No, you're different. I'm back in 2001 and 2, I was 30 years old. I'm 51 now. 2001 and 2, I had 1 kid. I got 4 kids now. You see what I'm saying? 2007, 8, 9, we had just moved to Texas with 4 young children in tow and more dead than what we should have. You see what I'm saying? But I didn't have any money. It didn't matter anyway because we're flat broke. I'm not the same investor I was back then, and you weren't either. And now I'm 51. I'm making good money, and I have less debt. I got a little bit more set aside. It's easier to deal with a decline. Hey, buddy, I want to say hello. Powell's like, look, protect your gains. Anyway, the point being is if you think this is a bear market, you don't know what a bear market is. So let me show you something here. Best pieces of financial investment stuff that it ever is. JP Morgan does his guide to the market every year. It's just awesome. Let's see if we can't go and see. I want to show you. I don't care about them. I can't. Let me pause real quick. I'm looking for something. Hold a sec. This is their annual returns in intra-year declines. Despite average intra-year drops of 14%, annual returns were positive in 32 of 42 years. I just want to make this bigger. So here it is, 49% in 2008. That's how much it actually dropped from top to bottom, 49%. Even though the year is only down 38%. But here's 2015. Is down 12%, May, and June. Here's 2011 is actually up, not much, but like 0.2, down 19% in July and August. Here's 2008 is down 20% Q4. Again, here's 2020 is down 34%. You see what I'm saying? So look at all these years: 12%, 11%, 20, 34. 19, 28, and here's 28, but it's up. Look, go back 2003. You might not remember, but The first quarter of 2003, the market kept going down. It was freaking horrific, man. And yet that year, it came back up. That's 1980, right here, 25%. The first quarter is down 14%. Anyway, the point being is, this is nothing, man. If this is making you lose sleep at night, then you're in the wrong business. Now the Dow's up 30. Off. It was down 1,100. Now it's only down 700. But it doesn't matter. I find it interesting too. The Treasuries just keep going down, 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 down. How could that possibly be, Josh? Anyway, so if this is scaring you, you ain't seen nothing yet. And I don't know if it's going to be this time or not. I don't know. But bear markets happen all. And bear markets, 20%. Let's see if they even show in here. 1980, down 10, 7. That's 87. That's 90. Look, 87. Look, in 87, up. 94, 2001 and 2, 2008, 2015, 2018. Just nothing but up. I'll put a link. This is such a great piece. I love this piece right here. Yeah, the whole thing. I love it. There's so much good stuff in here. Of course, I don't care. I just do VTV and done with it. But long-term drivers of economic growth. I just love this stuff. All right. Anyway, either hang in there or you get out. But don't kill yourself because life's too short to drink cheap wine. All right. We'll see you.